Hey everybody, Smart Silver Stacker here. Hope you're doing well. So, a warning for silver stackers, it may be expensive to get your hands on physical metal in the near future. Just a heads up. What am I talking about? Well, we got the potential for a silver squeeze looming. Gold just broke out of a consolidation range today decisively following inflation data out of the Bureau of Labor Statistics last week. Copper broke out decisively and it has continued to rally. And now the chart for silver is looking absolutely explosive. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Okay, so these are exciting times for stackers. If you want to make sure you stay up to date with the precious metals, subscribe to the channel, like the video. You can also sign up for my free e-newsletter down in the description. And let's talk about what's going on with silver, because the silver chart, I'll put it up on the screen right now, is on the verge of a major breakout. Silver rose today over 2%. It's back up over $30 an ounce. We had gold decisively breaking out of a months-long consolidation pattern. This is good news for gold, but I think it's even better news for silver because of the fundamentals that are shaping up here. Now let's talk about the inflation data briefly. We had the CPI data released this morning. The headline data was a little higher than expected, a little hotter than expected due to elevated energy costs, which accounted for a significant portion of the headline CPI increase. But the core CPI, so excluding the I guess less important food and energy, because who needs those things, it was slightly under expectations. So this has triggered renewed hope in these markets that there's going to be more easy money coming from the Federal Reserve. The anticipation of perhaps more than just one rate cut or of hikes this year, it's gotten much more dovish following this inflation reading. And this is, again, it's a clue that there's no real price setting mechanism in these markets. It's all just determined by the anticipation of what the folks over at the Federal Reserve, the central bank, are going to do. How fast are they going to debase the currency? And we also got the new Treasury statement, which shows the real reason why the Fed is going to have to print more money than maybe otherwise previously expected, and that is that the cumulative deficit thus far in fiscal year 2025 is over $700 billion. That's putting us on track for a greater than $2 trillion annual deficit this year. So if you want to know why inflation is rising, why they're going to have to debase the currency, you need to look no further than that. Energy is also going to continue to rise. They're trying to crack down on Russian energy exports with a new set of sanctions. So it's unlikely that spiking energy costs will be coming down anytime soon. And yet there's this anticipation that the Fed's going to cut more. And again, it's because they have to. It's because they have to avert a debt crisis and a total collapse of the economy. It doesn't matter who's in the White House. When you have $36.3 trillion in debt, there's really only one move for the Federal Reserve to do, and that is to cut rates. Now, recently, we have been experiencing a surge in U.S. Treasury yields. The 10-year yield was getting close to 5%. It got smashed down today. Perhaps that was intervention by central banks. Perhaps it was investors, but it did come down today. And that is, again, the reason that the Fed is going to have to be more dovish here. I mean, if you recall back in March of 2023 when the banks started to fail, that was in large part due to rising U.S. Treasury yields, which was creating huge unrealized losses on the bank's balance sheets. And now with Treasury yields on the rise, once again, they've been spiking up recently. It's putting us back into the danger zone. In fact, they're getting close to where they were at their peak previously in 2023. So there's also the possibility of a squeeze in the works. We talked about this in a video earlier this week, how right now LBMA silver stockpiles are being drained as a result of fears surrounding tariffs on critical materials like copper and like silver. And this is causing some intense demand here domestically in the US on the COMEX for silver. Now, if we look at the COMEX report regarding silver inventories that was released yesterday, this is about activity from the 13th, you can see that deliverable silver, that is the registered category, that is silver that is actually available for delivery, has declined just in that one day by more than 2 million ounces. These are basically just derivative markets which are used to smack down and manipulate the price of silver. There's a very small amount of underlying silver there, and it will be a big problem for the banks if there's a short squeeze or if the price is driven up. Now, in that video, I got a lot of pushback in the comments about talking about the renewed possibility of a silver squeeze. We've heard this before, we've been hearing this for years, and while that is true, the fact is that the stage has been being set for this event for some time. Now, is it actually going to play out this time around? I don't have a crystal ball, I don't know, but I do know that the stockpiles at the LBMA in London are at their lowest levels on record, and it appears that deliverable silver on the COMEX is also declining, and the threat of potential tariffs is very real. And we also are living in an era where foreign central banks are gobbling up gold. China bought more gold just recently in December, the second month in a row of resuming their official purchases. Even though interest rates are rising, something that typically would be very negative for gold and silver, you've seen the metals perform quite well. This chart from Goldman Sachs shows that following the seizure of Russian assets by the US and its G7 allies, there has been a marked divergence of the correlation between interest rates and gold, and that is because those nations are looking for hard assets. Now, what else are they buying? Well, in October of last year, that was actually around the time that the silver price was peaking, the Russian State Investment Fund announced that they would begin adding silver to their official holdings. So we may be on the verge of an actual remonetization of silver on the world stage at the same time that we have a global trade war breaking out, rampant inflation around the world, massive currency debasement among all the fiat currencies of the world, the dollar included. The dollar index has been on the rise. Gold and silver are rising along with it. So is copper. This is all somewhat unusual, but you got to understand the DXY is just a measure of the dollar's purchasing power relative to other fiat currencies. So if you've got those other fiat currencies crashing faster than the dollar, you're going to see the dollar look strong. But in reality, just look at what's happening with gold and silver. The dollar is just the healthiest patient in a terminal ward at this point. And again, all you got to do is just look at the massive deficits, the amount of debt that is being accrued. And yeah, there's some in Washington who are paying some lip service to cutting government. I'll tell you what, I'll believe it when I see it, right? Doesn't matter who you are when you're in the White House, there is a certain amount of spending which just is sacrosanct, and it's just completely politically unviable to cut it. And there's only so much discretionary spending that you're going to be able to eliminate. So my optimism about the ability of the incoming Trump administration to balance the budget, I genuinely hope they're capable of it, but we have to be a little circumspect here and not just give in to irrational optimism. So it's a very interesting time in the silver market. This is a chart that we really need to be looking at. So far, you've got copper breaking out, gold breaking out, and now the silver chart looks like it may be the next breakout commodity. The silver price is just touching this downward sloping trend line that marks the top of a consolidation that goes back to the peaks in October. And if we get a decisive close above that trend line, and it's looking like we may get that soon, it's going to be very significant for the price of silver. And I would not be surprised if in the first half of 2025 here, we go on to hit new highs above $35 and maybe even taking out new record all-time highs in silver. Certainly, the sentiment in silver right now is very low. And when you observe that, I read the comments on these videos and I can tell when the sentiment is low. And right now, even seasoned silver stackers are capitulating and turning fairly negative on the metal. I know there's some of you out there who are still stacking. That's what I'm doing. I just picked up some more junk silver coins from SD Bullion. We are at a juncture in the silver market. We really need to pay attention. It's not going to take much to trigger a significant move to the upside. But this negative sentiment in the silver market, I think from a contrarian point of view, is actually a very bullish development. If there's nobody left to turn bearish, then who is going to be selling? And when the sentiment shifts, there's going to be a lot of potential buyers coming into the market. And the reality is that there's just not that much of this stuff to go around. So keep an eye on that silver chart. We might see a breakout soon. Leave me a comment down below to let me know what you think about the potential for a silver squeeze. And if you enjoyed this video and you want to see more like it, check out the video that's popping up on your screen right now. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker out.